Welcome back to Teach Me Now. So what we have over here is a fixed asset question. So the information provided is for a company called Chinam Horror. Chinam Horror Stores. The financial year end of the company is 30 June 2019. So that's the first thing we're gonna have to note. It's important for you guys to know when the year end is gonna be and keep that in mind. As you do your question because it's important for when you're calculating your depreciation. Okay. So the reason why I'm saying that is because you may be required to apportion your depreciation. What I mean by that is the depreciation amount is going to be based on the number of months you've used the assets. So say, for example, our year end is 30 June 2019, and we decide to buy an asset, either a vehicle or an equipment in January of 2019. So if that's the case, then our depreciation is going to be based on the number of months we've used the asset, starting from January, March, April, May, June, July. So the amount you're going to get for depreciation is going to be multiplied by 6 over 12. The 6 months being, again, the months you've used the asset for, because do not forget that the definition of depreciation is an expense of using an asset, right? It's an expense of using an asset. So if you are not using your assets, that means you are not incurring that expense. Hence, that's why we only apportion it for the number of months we've used the asset for. Okay, so please bear that in mind. So let's continue to the question. So the required says we need to prepare an asset disposal account on 31 December 2018. Please do note that 31 December 2018 is not our year end. Year is not our year end. It is actually 6 months before our year end. So what this says is that we might be required to apportion the assets that we're selling, okay? Since we're required to prepare the asset disposal account 6 months before the year ends. So let's go ahead and put the information. So we have over here a fixed asset note that the information is given below. So we're going to be focusing on note B. So note B says equipment was bought. So that's equipment bought on 30 June 2016 for 50,000. But then it was sold for cash on 31 December 2018 for 21,000. Okay, before we continue with that information, let's go and look at our asset disposal account. Okay, so let's write over the assets disposal account. Okay, so we're gonna have our debit over there, we're gonna have our credit over here. So before you go ahead and fill in your account disposal account, you need to know the structure of the account. What I mean by that is you need to know what goes where and what amount you need to write. So on our debit side, we're going to have, if, for example, okay, so in this case, we're going to be selling an equipment, okay? Since we're going to be selling an equipment, we're going to write equipment over there, okay? Equipment, and then over there we're gonna write the initial cost of the equipment. What I mean by that is the amount we initially bought the equipment for. So in this case, we bought the equipment. Let me erase that. In this case, we bought the equipment for 50,000. Okay. Then again, on our debit side, we're gonna have our balancing figure, which could be the profit. It could be the profit, could be. We'll see whether we've made a profit or a loss. And then on our credit side, we're gonna start with depreciation. Okay. And then we're also gonna have accumulated. So the depreciation is for the current year before selling the equipment. Then secondly, we're gonna have accumulated depreciation. So that's going to be the total depreciation for the previous years. Then we're going to have either bank or credits, depending on whether we sold the equipment on cash or on credits. And then our balancing figure for this one, for the credit side, is going to be loss, okay? Depending on whether we made a profit or a loss. So in this case, let's take a look at the information. The information says, it says we bought the equipment for 50,000. Okay, we've noted that. We have sold it on 31 December 2018 for 21,000. Okay, so we bought it on so we bought it on okay, let me do that. So it was bought on 30 June 2016, okay, and then sold on 31 December 2018. So the dates, as I've said, are very important. So let's go ahead and do that. So we have sold the equipment for 21,000. Okay. So now, regarding the dates, what we're gonna have to do is create a timeline. Create a timeline. So firstly, it says 30 June 2016 is when we bought the equipment, okay, which was for 50,000. Then we go to year end, 30 June 2017, which is the year end. So that's 1 year. And then we also go to 30 June 2018, another year end, 2 years. So we've used the equipment for 2 years so far. Then we go to the current dates, which is 31 December 2018, when we sold the equipment, which is from 30 June 2018 to 31 December 2018, that's 6 months. So the 6 months is the current year. It relates to the current year, okay? So the prior years from the first year to the second year relates to the accumulated depreciation. Then the current year is our depreciation, okay? So let's go ahead and calculate the depreciation. But before we calculate the depreciation, before we calculate it, we need to know what type of method we're going to be required to use. So in this case, our depreciation method depreciation method is a cost price slash straight line method. So the other type of method you need to know is your diminishing balance method. So with that method, with the diminishing balance method, when you're calculating each year's depreciation, you need to minus the cost price of the assets with the accumulated depreciation of the assets, right? But that's for your diminishing balance method. Okay, but then in this case, we only have the cost price. We are required to use the cost price. So we do not have to minus the accumulated depreciation from the cost price, okay? of the assets. So let's go ahead and calculate our accumulated depreciation. I'm not sure if my spelling is correct. I don't think this is supposed to be there. We're gonna say 50,000, which is the cost price, times 15% times 2 years, right? Because we've used the equipment for 2 years. Excluding the current year. So the amount for that is gonna be 15,000. So we're gonna go ahead and write it over there, 15,000. Okay. Then we're gonna continue and calculate our depreciation. And then for our depreciation, since the depreciation method is the cost price, we therefore not required to minus the accumulated depreciation from the cost price. So we just gonna say times 15%, then times 6/12, because we've only used it for the 6 months. Okay, so the answer to this is gonna be 3,750. So we're gonna write it over there, 3,750. Okay, so now we need to calculate the balancing figure. Let's go ahead and do that. So the balancing figure, so it's us trying to figure out whether we've made a profit or a loss. So we're gonna say 50,000. So that's the initial amount we bought the asset for, minus 3,750 minus 15,000 minus 21,000. So that's gonna give us, let me quickly check over here. It's gonna give us 10,250. So this is gonna be our loss, right? Because we've bought the asset for 50,000 and we've used it for 3,750 and for 15,000 and then sold it for 21,000, of which as a result we've made a loss. So the loss is gonna go there. The loss is 10,250. Then we're gonna do that, say 50,000. Do that, say 50,000. Okay, people, so that is how you calculate or prepare your asset disposal account. So there's nothing too complicated about it. The things you need to know is the structure of your asset disposal account, what to write and where to write it and for what amount. Okay, and then you also need, if you are not given an accumulated depreciation for the assets you are selling, you need to therefore create a timeline so that you can clearly see the years you've used the asset for and whether you need to apportion or not. Okay, so we've used the assets for 2.5 years, right? So for the 2 years, that will be our accumulated depreciation over there. And then the current year, we've only used it for 6 months. So we need to apportion it, of which we've done it 6/12. And then we filled in our asset disposal account. Nothing is too complicated about this. Like I said, you need to know your structure, know how to create a timeline, know how to apportion, and know how to use your method, your depreciation methods. Okay, like I said, there's 2 types of methods. In this case, we were told to use the cost price method, which is the easiest method. Yeah, so if they're gonna ask you guys to use the diminishing balance method, then they're gonna give you more marks for that, which is a good thing, because this question, a fixed asset question is not too difficult. Okay, so that's it for now. Please tune in for the second part of the question where we're gonna create an asset note and a fixed asset note.